When you talk about Japan and China intervening in their currency markets, what actions are you actually talking about?
Yeah, so we've had the Japanese yen drop by 20%, over 20% relative to the US dollar, and the Chinese currency, remarkably, a controlled currency, not something that sort of trades in the open market freely, not as we would understand free trade
Hmm.
in the currency markets, it's down by 10% next to the US dollar. And it's gone past a critical level, really like a hot knife through butter. 7 to 1 was the exchange ratio. It went beyond that by a nickel, then by a dime, then by 25 cents on a very rapid basis. And what it's required by both central banks, the People's Bank of China and the Bank of Japan, is to come in and sort of support, hold up the currency, and make sure that it doesn't continue to depreciate. In the case of the Japanese, they're really in this catch 22 because, on the one hand, they want to support the bond market, which is one of the reasons why their currency has suffered. Now they want to support the currency market, and they can't necessarily have it both ways. Something similar happened in the 1990s where there was an exchange rate mechanism, and it ended up being impossible for the British to support their currency, and all of a sudden the currency broke. In other words, the exchange rate mechanism broke, and their currency went into free fall. Went into free fall. So that's what we could see. And so watching the Chinese currency and the Japanese currency in here to see how much credibility the central banks have, how much power they want to wield, or what the cost will be to do that. The People's Bank of China has a lot of firepower, a tremendous amount of firepower. They can support their currency and do that for a good long time. The Bank of Japan, not so powerful, not so credible. So if you're going to look for a currency to break, it would probably be the yen.